Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Lens Technology Co. Limited annual report. Lens Technology Co. Limited offers a wide range of businesses and services that cater to various industries. At the core of their operations are structural components, functional modules, complete machine assembly, and supporting services. They provide various materials for different applications, including front and rear glass covers, metal, sapphire, ceramics, plastics molds, and protective panels. Their product offerings also include fingerprint modules, touch modules, biometrics, and other appearance structures that enhance the functionality and aesthetics of their clients' products. In addition to these components, Lens Technology Co. Limited provides functional components, supporting accessories, fixture molds, and self-developed industrial internet systems. They also offer production, testing, and automation equipment to streamline manufacturing processes. Their services cater to a diverse range of applications, including smartphones, smart wearables, laptops, tablets, smart vehicles, smart home appliances, photovoltaic products, and more. With their expertise in research and development, production, and sale of structural components and functional modules, Lens Technology Co. Limited has established itself as a leading provider of innovative solutions for various industries. Lens Technology Co. Limited market capitalization of $156 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Lens Technology Co. Limited holds a significant advantage in their industry. Lens Technology Co. Limited trades at a higher price-to-earnings ratio of 23 times and a higher price-to-book ratio of 1.79 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 40% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be identified from the extracted summary. On the growth side, contracts with customers have seen a significant increase, contributing to RMB 74,268,635 in revenue. The sales of smartphones and computers have also grown by 6.1%, while smart vehicles and cockpits have experienced an even higher growth rate of 9.2%. Mainland China has been a key contributor to revenue growth, with a 4.35% increase. The company's focus on emerging technologies such as AI glasses, which are projected to reach 10 million units in 2026, is also driving growth. The Chinese intelligent cockpit market is expected to reach RMB 112.7 billion in 2026, with a CAGR exceeding 17%. Additionally, the company's full industry chain vertical integration and smart manufacturing capabilities have enhanced production efficiency and yield rates. On the decline side, leases revenue has decreased by RMB 79, while other smart devices revenue has seen a significant drop of 25.1%. Offshore revenue has also declined by 0.4%. These factors highlight the importance of diversifying revenue streams and maintaining a strong presence in various markets to mitigate potential declines. The company's financial performance indicates a strong ability to generate cash from its core operations. The data shows that the company has been able to increase its net cash flow from operating activities by 5.29% year-over-year, reaching RMB 11.465 billion. This significant growth in operating cash flow is a positive indicator of the company's financial health. Furthermore, the net cash generated from operating activities is also substantial, amounting to RMB $464,999. This suggests that the company has been able to efficiently manage its operations and generate sufficient cash to meet its needs. Additionally, the total net proceeds utilized are less than the total net proceeds received, which confirms that the company is indeed generating positive operating cash flow. Overall, these financial metrics demonstrate that the company is capable of producing a steady stream of cash from its core business activities, indicating a strong foundation for future growth and success. The company's debt level has undergone a significant reduction in recent times. A closer look at the financial statements reveals that borrowings have decreased across various categories. Specifically, current liabilities saw a decrease of $1,226,980 in borrowings, while non-current liabilities experienced an even more substantial drop of $3,441,354. This decline is also reflected in the total liabilities, which have decreased by $299.67 million. The reduction in debt level suggests that the company has made efforts to manage its financial obligations and reduce its reliance on borrowings. This could be a result of various strategies implemented by the management team, such as cost-cutting measures or increased revenue generation. Whatever the reason, the decrease in debt level is likely to have a positive impact on the company's financial health and stability. The company's performance varied across different segments and regions in the recent period. On the positive side, mainland China was a standout performer, with revenue increasing by $447,453,000. The smartphone and computer-related business also saw a 5.94% year-over-year (YoY) increase, while smart vehicle and cockpit-related business grew by 8.88%. Smart head-mounted displays and smart wearable-related business recorded the highest growth rate of 14.04%. In contrast, some regions struggled to keep pace with the company's overall performance. Hong Kong, Vietnam, and the U.S. all reported negative current taxes, indicating underperformance in these markets. The other smart terminal businesses also saw a significant decline of 25.34% YoY. Southeast Asia, which includes Thailand and Vietnam, was another region that failed to meet expectations. Overall, while some segments and regions showed strong growth, others struggled with declining performance. This highlights the need for targeted strategies to address these challenges and capitalize on opportunities in high-growth areas. Management is outlining a clear vision for the company's future growth. They plan to focus on emerging markets such as embodied intelligence, AI servers, and commercial aerospace. This strategic shift will lay the groundwork for high-quality development in the long term through investments in research and development. To achieve this goal, management aims to expand the product portfolio into new areas, including low-orbit satellite final assembly and aerospace-grade materials. Additionally, they are intensifying efforts to reduce costs, enhance efficiency, and invest in R&D to stay ahead of the curve in terms of technology and customer demand. The company is also taking proactive steps to mitigate risks associated with exchange rate fluctuations by adopting strategies that promote sustainable development through investments in emerging industries. Overall, management's strategy emphasizes a forward-thinking approach to growth and innovation. The company has demonstrated its commitment to returning value to shareholders through various means. One key aspect is the payment of dividends, which has been consistently practiced by the company. In fact, it has paid out significant amounts in cash dividends, with a notable instance being the distribution of RMB billion in 2024 and 2025. In addition to dividend payments, the company has also engaged in share buybacks. This strategic move allows the company to reduce its outstanding shares while potentially boosting shareholder value. Specifically, the company launched an A-share repurchase plan that resulted in the acquisition of a substantial number of shares, totaling 12.849 million. That concludes the financial summary for Lens Technology Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.